morning. I'm Pete Najarian. This is the take on this Monday morning. And you go back to last week, and it was an absolutely incredible week. Monday, Tuesday, Wednesday, extremely strong. A little bit of a pullback on Thursday, of course, specifically on the NASDAQ. Then you get into Friday. Friday, just another monster day. And we had those gains. So those gains were absolutely popping to the upside. A lot of it driven, by the way, through technology, both the NASDAQ and in the Dow itself. A lot of technology, of course, within the Dow these days because of some of the ads over time. And it really did change things a lot there. So the Dow finished up like about 215, 216 points, a little more than 0.5%. Meanwhile, the NASDAQ finished up the day over 100 points to the upside, 113 to be precise, about 0.75%. Just a very, very powerful day. The one thing I will say, though, is high multiple, no multiple names, they were not participating. This was old school technology that was leading, and we'll get into that a little bit deeper in just a second. But crude holding right around that 72. We talked about that bounce off of those mid 60s. Here we are. We feel like we haven't moved a whole lot with crude. It's somewhere, but seems like of late, somewhere between 70 and maybe let's call it 72, 73, sort of in that sort of a range. But nonetheless, bouncing off of some of those near-term lows. You look over at the 10-year, it's been pushing that 1.5. It just has had a hard time breaking up and through that area. A lot of expectations of that. Obviously, Fed having a lot to do with that as well. We'll see how that plays out, but didn't quite get up and through that 1.5. Matter of fact, got very near it. I look over at the volatility index, though, what a pounding that took. We were talking about that all week, how it had just come down, 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 and the velocity of that move, absolutely extraordinary. So we had a nice wide range on Friday, call it the mid 18s up to the mid 21s. We finished on those mid 18s. 1869 was the low. That's pretty much right where we closed on the volatility index on Friday. So huge volumes returned, and we got right back to those volumes that are the average, basically. We talk about 44 million a day is the average. Traded 43.8 million after a little bit of a disappointing day or two last week where we had pulled back on some of that volume. Matter of fact, Apple, 3.2 million, and if Apple hit and pushes new highs, but also pushing that 3 trillion level as well. Amazing market cap, 3.2 million contracts trading in Apple. You had another 1.6 million in Tesla, and then throw in 1.5 million in that meme stock, otherwise known as Ford. Ford has been absolutely ripping to the upside, just a huge run to the upside, up and through that 20 level, and ever since, just the volumes have been there, and they just continuously have been very, very bullish buying that we have been seeing in that name. And as a matter of fact, it was just those three, though, that were over 1 million. So that just gives you a little bit of an idea. A nice broad participation across all or so many of the different stocks out there. Even with that 3 million, you got 3 million, another call it another 3 million if you add the others together. 6 million of that 40, almost 44 million. Still a lot of contracts trading across so many different other names. So a really nice big jump. Bitcoin been kind of trading in a fairly rangy area as well. Did have some big moves though, but here we are trading right around 49,000, very close to that level. So sector-wise, what was really moving? Well, technology certainly was the leader, and the leader with old school tech. It was Cisco with those numbers. It was up 3%. Oracle with that great return that a lot of people were talking about, what they were able to produce with those numbers. 15.5%. It had been a little higher even than that. Throw in Apple with that massive market cap and the influence that that's got. That was up nearly 3% as well. And then throw in Microsoft just for a little goodwill, almost up 3% as well. So technology up about 2%. Staples up about 2% as well. Just take a look at Costco, up 6.5%. It has been a monster and has continued to be a monster with this nice big run to the upside. You also had Coca-Cola up about 2% as well. Throw in a little Walmart, almost up 2%. Energy, some nice moves there. Some of those beta names in energy were definitely pushing to the upside as well. And the material space, you got names like Ecolabs and DuPont having really, really nice sharp moves to the upside, helping push that material space up a little more than about 0.5%. There were some losers, however, as well. You look at Moderna, that was down 4.5%, 5.5%, excuse me. Etsy was down about 4%. Goldman Sachs, Morgan Stanley, Citi, all down a couple of percent. Financials were not a very good participation area in this rally that we had seen across the board. Peloton, yeah, Peloton got hit once again, another 5% on Friday. Actually trading a little bit better today. But it was those multiple names, those high multiple names we talk about, DocuSign, Okta, Splunk, all of those names lower. But Ford, GM having a really great day. Ford was up about 9%, GM was up about 6%, and obviously those investments as well from Ford and Amazon not hurting so much with Rivian, where that's been trading of late. So as we get into today, we start off with the Dow, a little bit flat, NASDAQ up about 50 points. By the time we get to the open, the Dow suddenly gets hit pretty significantly to the downside, opens somewhere close to about 100 points to the downside. You look over and a complete flip in the NASDAQ as well. That was down about 50 points. Kind of got a little bit better, but last I looked just a few moments ago, the NASDAQ was down about 90 points. We look over at the Dow, it went from down 100 points down to 200 points. It was just a moment or two ago down 270 points. So seeing a little bit of hands out, as they say, with some of that selling. Volatilities, of course, starting to rise back up a little bit as well, trading around 20 and a quarter. Last I looked, it was trading a little closer to 20 and a half. So we are seeing a nice lift out of that as well, understandably so, when you start to see that kind of a move to the downside. A little bit of those nerves, and folks is definitely reaching a little bit, and we're seeing that volatility start to raise again. The 10-year pulling back off of that near 1.5, it's actually under 1.45, it's 1.44. You look at crude holding right near that 71 level, 71, 71.20. So that's holding in there, but off a little bit. And with that being off, energy down about 1.5% early. Last I looked, about 2%. Consumer discretion was down 1%. That's now down 2%. Financials were down about 0.75%. Now that's down 1.1%. Semiconductors, technology started off flat. They started to push to the downside as well, down about 1%. And then you look over at biotech, actually the one area that's been holding in there pretty well, subsector, but you look at some of the healthcare, that was in the green the last I looked. So these beta energy names definitely getting hit today. We talked about energy was in the 72s, now in the 71s. You look at Apache, you look at Occidental, you look at Marathon, Pioneer, those names under some pressure. Best Buy today is under some pressure as well. When I last looked, it was down a couple of percent, but Apple, at least very early, spiked and got up to 181.80. So we'll see, but Apple definitely helping buoy a little bit of some of that selling that we are seeing in the NASDAQ. Facebook was up a couple of 2.5% or so, but Tesla down about 2%. So you can see a little bit of the movement that we are seeing in there as well, of the high multiples versus those with a little bit more of that quality in terms of what their fundamentals look like right now. So got two unusuals for you, and that's going to be it for the day. I will be on WCCO local radio. It is streaming. Corey Hepla, we always have a great time. We're going to be on 10 o'clock Central Time as well, and we got the cash flow portfolio at 10:30 as well. So busy morning, but nothing on CNBC today. So first one, we'll start off with Apple. Apple having a really nice day. Volume very strong once again. Stock was trading right around 181 at the time of this. 11,000 buyers of the December 23rd 205 strike. Now that's interesting because in the last week or so, we had a couple of different hits throughout the week. I think we had 4 or 5 different hits in Apple, all bullish, all looking for upside. One was just out of the money. One of them was in the money calls. And we had this way out of the money 205 calls that were being bought as well. So today we're going to those 205s once again, December 23rd, 205s. Very inexpensive. You're pretty decently far out of the money. 20 cents up to about 29 cents on 11,000 of those calls. So that stood out. Qualcomm very early, that hit right out of the gate. Stock was trading just above 190 at the time. We had a buyer of 13,000 of the December 190 calls right at the money. So they're going aggressively, fairly short term, obviously this week. 160 up to about 350 is what they were paying as that stock was starting to rise when they started buying these calls with the stock well under 190. Now trading right around 190 at the time of the finishing of these trades. And add on to that, they bought 4,000 of the December 195 calls as well. So not only are they buying the 190s, they're buying the 195 calls as well. This is not a spread. They're buying and buying. So two separate trades, but looking for some upside again after that great run that Qualcomm's been on for a while. Folks, hopefully you have the knowledge. If you do not have the knowledge, you want to get educated. Market Rebellion is one of the great places with great educators. We're always very, very proud of that. But the derivatives markets, you hear me talking about 44 million a day. That is incredible. 2 years ago, when it started to get really big, we were about 20 million a day. Now we're at 44 million a day. So gives you a little bit of an idea of where the growth is, and it is in the derivatives markets. So you want to have that knowledge of how you know how to navigate through that, understanding all the Greeks and all the rest of that. If you don't, like I say, get educated on it, because that is the growth area of these markets. Have a great day of trading.